Hi everyone, welcome back to my channel. This is my usual weekly technical analysis outlook videos in which I will comment on what I think will happen to some FX crosses and equities. I have another series running, the Financial Market series, that breaks down topics in the financial market in ways that are easy to understand. You can find the links in the description about these videos. As always, before I begin, I want to clarify that this is not a solicitation or recommendation to enter into long or short positions in the names that I will mention in this video, nor do I have existing positions in them. This is not financial advice, and if you're using this content as a guide to trade, you are doing so at your own risk. Alright, let's start. The first part of this video will be about reviews, and these are the names that I have covered in past videos, and I will do a quick review on each of them. Next, I will begin covering these names and review them in upcoming videos. I've put in timestamps, so please use it to skip to the names that interest you. As noted in the video on the 17th of November, dollar Swiss expectedly advanced above the Ichimoku cloud, so its upside bias has been boosted. We are still waiting for the completion of this head and shoulders bottom, a bullish pattern via a weekly close above the neckline at 0.9224, and if that happens, the textbook target is much higher at 1.0111. Moving on to equities, I have not covered Nissin Foods since the video on the 25th of August, in which I said that it is undergoing a correction and could return to 4,200 first before resuming the bearish trend. As expected, Nissin advanced through September and October, reaching a high over here of 4,234 before sliding in subsequent weeks. This week's failure over here to hold above the 20-week simple moving average is likely the start of further downside. I'm staying bearish on Nissin Foods, and the head and shoulders top has a textbook target at 2,539. Over here, and there are still two supports that can bounce Nissin Foods higher when tested. First is at 3,640, followed by 3,124. In the video on the 29th of September, I said that Hugo Boss completed a falling wedge, a bullish pattern, and the textbook target is at 47.39. Now since then, Hugo Boss advanced and entered into the correction phase before bouncing near the support trend line to resume its upside. I believe Hugo Boss is now in the bullish resumption phase. I will stay bullish on Hugo Boss, retaining the target at 47.39. In the video on the 17th of November, I cautioned that Novo Nordisk could enter into a corrective advance to around 826.7 before resuming the downside. Now, let us examine the last few weeks of price action. Obviously, price action expectedly rebounded, but was eventually rejected by the cloud. So with the latest close below the cloud as well as below the 20-day simple moving average, I believe Novo Nordisk has entered the bearish resumption phase. So stay bearish on Novo Nordisk, targeting 619.6. I highlighted gold's bearish potential in the video on the 10th of November, and just 1 week later, gold over here completed the rising wedge, and since then attempted a rebound that was eventually rejected. Now this week's rejection clearly at the support trend line, or rather now is the resistance trend line, is a clear sign that downside should prevail going forward. Gold remains bearish in my view, and the textbook target is at 2,341.86. For silver, I showed a rising wedge in the last video on the 10th of November, and this bearish pattern, rising wedge, continues to be formed. Completion can only be confirmed via a breakdown below the support trend line. But switching to a daily chart, I believe silver is also forming another bearish pattern on the daily chart. It is a head and shoulders top with a very slanted neckline of around 29.7. So the latest price action close below the cloud as well as below the 20-day simple moving average, giving silver a bearish tilt. I'm waiting for a close below the neckline around 29.7 to confirm that this bearish pattern has been completed. The textbook target is at 24.83 over here. I'm moving on to the new coverages. I'll start off with FX as usual. Dollar, Mexican peso is bearish after the completion of a rising wedge on the 5th of December. Note that price action has closed within the Ichimoku cloud, giving it a bearish bias. So watch out for support at 19.75 as well as 19.07 that can bounce price action higher when tested. In any case, the bearish pattern has a textbook target at 18.45. Moving on to equities, perhaps the most important name that I'll cover in this video is NVIDIA. It has closed within the cloud in the latest price action, suggesting a bearish tilt. It appears to be forming a head and shoulders top, a bearish pattern. So a close below the neckline at 132.11 will confirm a bearish outlook. The textbook target is at 111.38. That's about 15% decline. The next most important name in this video is of course Apple. I suspect Apple to be forming a rising wedge, a bearish pattern. I'm waiting for a rejection at the resistance trend line to be convinced that there is a good chance that Apple would complete this pattern, which is via a breakdown, a weekly close below the support trend line. Now note that the RSI, the relative strength index, is showing divergence between price action and momentum. What this means is price action is higher, and comparatively the RSI is lower and lower. So this usually suggests an imminent bearish reversal. The textbook target of this rising wedge is at 176.46, which is about 26% decline from the support trend line. A double top may be forming in IBM, but this is still very early and needs a lot of work to be done. A daily close below the 20-day simple moving average will be a good indication of IBM's bearish intent, while closing below the cloud region will be ideal. A close below the neckline at 204.07 will complete this bearish pattern that has a textbook target at 170.75. That's around 16% drop. Qualcomm is another tech name that may be forming a bearish pattern, a head and shoulders top. Price action is currently trading below the cloud, tilts it towards a bearish bias, and a weekly close below the neckline around downward sloping 154.56 will complete this pattern that has a textbook target at 80.59. But do watch out for the support at 102.22 that can bounce Qualcomm higher when tested. The last new coverage in this video will be on a Japanese name called Marubeni Corp. I believe it is forming a bearish pattern, a head and shoulders top, with a neckline at 21.22. A bearish outlook actually already prevails because it is currently trading below the Ichimoku cloud, and recent upside was rejected by the 20-week simple moving average. Marubeni, if it closes below the neckline at 21.22, a bearish outlook will clearly prevail. The textbook target is at 10.88. But do watch out for two supports, one at 1,500.5 followed by 1,692.5. These are firm supports that can bounce Marubeni higher when tested. That's the end of my sharing. I will give updates to these crosses and names only when there are meaningful development, and in the next video it will highly likely be on new crosses and new names. If you like what I'm doing, please help me out by giving me a like. Please subscribe and hit the notification button for more videos like this.